Hello everyone and welcome to a special episode of Digest and Invest by eToro. Today we are turning our attention to one of the fastest growing investment hubs in the world. I'm talking about the United Arab Emirates. Joining me today is George نداف, Managing Director of eToro in the UAE, to unpack some of the fascinating insights from our latest retail investor survey. George, how are you?
Hi Josh, good morning. How are you? Everything is fine, no complaints.
Good. That's what we like to hear. I'm very well as well. Thank you very much. So what we're going to be doing today is we're going to be diving in to what's driving UAE investors today, how they're positioning their portfolios, and what it all means for the future of the region's investment landscape. And to do that, we're going to go through our Retail Investor Beat survey. For those that don't know, it's a survey that eToro completes every quarter with 10,000 retail investors around the world. And this specific insights are looking into the 1,000 investors that we spoke to in the UAE. So diving in straight away, let's have a look. The survey shows that UAE retail investors have strong conviction in their home market. 85% of UAE retail investors are fully invested in local equities. That is a huge number, George. Why do you think local equities, particularly DFM and the ADX, are attracting such strong support from investors right now?
Phenomenal. George, before we go through answering this question, I want just to give a quick summary for this RIB we have conducted in the region. So basically, I can summarize it into three main points. The first one is that we saw that 90% of the investors in the UAE are anticipating an impact from tariffs and trade war. And we saw that 89% are adjusting their portfolios accordingly. And that's actually show a high impressive level of adaptability. That's the first point. And the blend they put in place is a blend of local stocks and defensive assets like commodities and cryptocurrencies. The second point that I witnessed is basically the positive sentiment overall to the local market and the local growth, driven by many reasons. And I think we will discuss it through this podcast. And the third point is that uncertainty is not preventing investors from continuing to seek opportunities in the market. So we saw that 65% of the UAE retail investors have already increased contribution to their investment portfolios over the previous month. And we saw that 76% are expect to increase contributions over the next 3 months. For your question, Josh, regarding the focus on the local equities, I would say there are many reasons behind it. And, those who are living in United Arab Emirates can feel the good vibes overall. So I would say there are many reasons for that focus. The first one come with the economic resilience and reforms we have in place in the United Arab Emirates. So look, in general, UAE has demonstrated a robust post-pandemic recovery supported by economic diversification strategies under initiatives like UAE Vision 2031, altogether has strengthened the investor confidence. We saw a strong performance of local indices. Both Dubai Financial Market and Abu Dhabi Securities Exchange have seen healthy returns, with major listing like DIWA, ADNOC subsidiaries, and IPOs activity attracting investors' capital. And by nature, the UAE stocks are well known for relatively high dividend payout, which appeals to income-focused retail investors, and it's very easy to access them. So, the digital trading platforms and the collaboration we have done between eToro, DFM, and ADX, it's very easy to access these stocks nowadays with the retail-friendly platforms and mobile-first brokerage. All these access make it easy for investors to allocate local stocks within their portfolios. And there is another element, I call it the patriotic investment, where there is, I would call it a degree of home bias. Mm-hmm. Okay, local investors tend to trust and understand homegrown companies better, especially amid global uncertainty.
Yeah, absolutely right. Look, that home bias is something that we see, across the world, whether that's Australia, European markets as well. But that is a strong belief in your local market, 85% of people being invested in those markets. And it also comes down to, as you mentioned, George, those strong performance we've seen from both indexes this year. And what was also interesting from the report was that it wasn't just sort of short-term gains. Nearly half of those investors we spoke to are expecting strong growth in the UAE stock markets over the next year. So with what we've already mentioned, what do you think is driving that sort of future optimism, and do you think it's well-founded?
Again, those who are living in United Arab Emirates are feeling the vibes of growth, feeling the vibes of innovation, feeling the vibes of continue leading and creating more and more and more. So, answering this question, I would say I will start with the IPO pipeline we have in place within the capital market. So we're witnessing a momentum in the government-led listing and increased foreign participation. What creates optimism for liquidity and price appreciation? The real estate, banking, and energy, these sectors have posted solid earnings recently, supported by rising interest rate and high oil prices, altogether strengthen the investor sentiment. The macroeconomic stability, which is a key feature here, United Arab Emirates maintain stable inflation, a strong currency peg to the USD, and high sovereign credit rating, which bring long-term confidence. And the population and FDI growth, the visa reforms in place, expat retention, international investment flows are stimulating real economy sectors like constructions, finance, and services, all represented on the exchanges. So, these are the vibes of United Arab Emirates. Let's keep leading, let's keep pushing, let's grow. And that's actually what drives the optimism in markets.
Yeah, and I think it feels like something of maybe a bit of a safe haven right now when we think about it compared to sort of the rest of the world. You mentioned trade tensions right at the start, and it feels like, it's kind of sheltered a little bit from that. And those sort of reforms that you mentioned there are sort of really driving that confidence. And so, yeah, I think if we look longer term as well, George, 38% of investors believing that the Middle East could also outperform other global regions like the US and China. That's a pretty strong vote of confidence when we think about, how well the US has performed over the years, and also that sort of recent performance that we've seen this year from China. So to maybe bring together both of the questions, that we've already gone through, what do you think is fueling that sort of regional confidence amongst investors above those other markets?
Great question, Josh. I would say there are many reasons behind that drive. So I would start, first of all, with the relative macro stability we have in place in the whole GCC. So compared to the West, rising debt levels and China's economic slowdown, GCC offers a strong fiscal buffer, budget surpluses, and political stability. The infrastructure and the tech investment, projects like NEOM in Saudi Arabia and the UAE, AI and green energy push signal long-term economic diversification. Again, the demographics and the regional reforms, a younger population, regional collaborations like unification of markets and regulatory reforms attract foreign and domestic capital, and the commodities backbone. Being a key player in global energy and grow increasingly in renewables, the region provides a solid foundation for growth regardless of global cycles. So, in a nutshell, that actually what drives the confidence within GCC.
Yeah. And also, I think something that was really interesting for me as well is that if we dive, a bit more into sort of the sector specifics of what investors were looking at, they were especially bullish on real estate and technology within the UAE. Look, I think technology makes sense, right? It's sort of the UAE is building itself as that sort of hub for technology. And real estate also makes a lot of sense. If you've been to the UAE anytime soon, you'll see, Emaar, Aldar sort of plastered pretty much all over the city. And those are the stocks that have performed very well in the region over the last 12 months. But how do you think that these sectors are positioned to keep delivering on those expectations over the next 12 months?
Yeah, Josh, as you say, like those who come to the United Arab Emirates can feel it. Like it's the vibes, it's the real estate place, it's the technology place. All together are creating, the vibes of growth in the United Arab Emirates. And I would say these sectors are well positioned in the region. When it comes to real estate, we can see, like as you said, Aldar, Emaar, all these entities are driving the real estate sector and benefiting from strong demand from premium housing driven by population inflows, golden visas as well, and expat retention. The government-led infrastructure investment, such smart cities, tourism hubs, is also a growth catalyst. And again, the population growth in the region is driving the real estate more and more. And when it comes to technology, I would say, like United Arab Emirates is positioning itself as a regional hub tech with heavy investment in AI, fintech, and smart infrastructure. And again, the supportive regulation we have in place, the free zones they have built to attract entities outside the country, and government funding programs are accelerating growth. So together are, all together are creating the great vibes of a stable and robust real estate. Although, you're hearing here and there, investors talking about a bubble. I don't like using the word bubble, because real estate is real estate and it will continue leading. However, you will see, the up and down there. But again, for the long term, it's the drive for the economy, and the technology is the future, is the way you will grow using, the online business.
Yeah, absolutely. Yeah. And you mentioned sort of that growth that we're seeing in real estate as well. We're also seeing, rate cuts coming from, places like the US, and central banks sort of unwinding some of their sort of tighter policies that we've seen over the years, which is obviously a bit of a boon for real estate as well. And also what we're seeing in terms of growth across AI is only going to sort of really, see demand keep rising for, technology, and that growth will continue in places like the UAE. One of the things that has been a bit of a knock for markets this year has been global trade tensions. We saw the S&P 500 sink by almost 20% in April. You mentioned it at the top of the episode that investors were sort of adjusting their portfolios. 90% of investors from this survey saw those global trade tensions as a risk to their portfolio over the next 6 months. So how are retail investors adjusting their portfolios accordingly because of that?
Yeah, just as I mentioned previously, the uncertainty didn't prevent investors to take and to have a different approach when it comes to investment. And we saw that overall. So they increased diversification overall in their portfolios. Many are spreading exposure across sectors like utilities, healthcare, consumer staples, which are more resilient to trade disruptions. We saw a shift toward defensive assets like gold, dividend-paying stocks, local stocks, sovereign bonds, sukuk, and cryptocurrencies as well. And again, it's part of the financial knowledge and adaptability to changes, and shift toward local stocks in attempt to diversify the global risk. That's what we saw, and I think it's a great reaction for tensions globally, for the global tensions.
Yeah, and I think it just goes to show how sort of nimble the retail investor is these days. When we do see those global tensions moving in, that flexibility to be able to adjust the portfolio, but also the beauty to have access to so many different markets available on eToro, whether that's from bonds to commodities in terms of gold, those dividend paying stocks, from geographical diversification. It really offers that that diversification that is needed, from what we've seen in markets this year. George, one of the points you mentioned there that, again, I think was one of the things that really stood out to me the most from this survey, and we spoke about safe haven assets, and you mentioned gold there. Crypto ranked alongside gold as a go-to safe haven, which, if we go back a number of years, may not have been anywhere near the conversation. Now we're starting to see it, coming in a little bit more. Bitcoin obviously seeing, allocation by, global wealth managers across the world. Your BlackRocks, the launch of that ETF has been a big part of that. But what do you think that allocation to crypto in the UAE tells us about how local investors are approaching risk and volatility in today's markets?
Crypto, first of all, I would say, I don't like to use crypto as safe haven in general. Okay, it's not me. Okay, but the equal ranking of crypto with gold reflects a generational and structural shift. So first of all, the risk tolerance and digital native mindset. So in the Middle East, we have younger investors that are more comfortable with digital assets and often view them as long-term hedges against fiat devaluation or geopolitical instability. Okay, and it's part of their vision when it comes to investment. And when I meet younger investors, like I hear it everywhere. Trust in the UAE regulatory stance. So the UAE has adopted a relatively progressive crypto framework, and we saw regulations that are open to regulate and to organize the crypto domain, which enhances trust and reduces perceived risk in that domain. And the desire for portfolio diversification, like gold and crypto serve different roles, but both are viewed as stores of value. And we all know that, including both indicates our broader awareness of managed through uncorrelated assets. So in a nutshell, crypto and gold, commodities and cryptos as a whole, considered to be part of the risk diversification in the investors' portfolios when it comes to instability
Yeah, look, George, I think that it just goes to show that sort of shift that we're seeing in the demographic of investors. Obviously, that younger generation of investors do have that slightly higher risk appetite than maybe sort of the older generation, and probably why we're seeing maybe that allocation to crypto more than ever. But also, gold has been one of the best performing assets so far this year, so not a surprise to really see that higher allocation in portfolios. Look, George, all in all, some really great insights there. I think the one that probably stood out for me the most alongside gold and crypto was that allocation to those home equities. I thought that was really interesting, just showing the confidence that local investors have in the local market. So, George, a big thanks for joining us and sharing those insights on what's shaping investors in the UAE.
Thank you, Josh. Pleasure meeting you, and good luck to everyone.
It's clear that confidence in the local market is remaining strong. And as we've heard, UAE investors are not just optimistic, they're actively positioning themselves for the future with conviction. And don't forget, you can access stocks from the DFM and from the ADX, all available on eToro. As always, thanks for tuning in. We'll catch you next time.